Welcome to this video today, which is all about a simple Forex trading strategy that combines fundamental and technical analysis together to generate high odds trades. I'm going to discuss the strategy in detail in a moment and also outline 3 high probability trade setups. Before I do so, I just want to give you a couple of quotes that I think perfectly illustrate how the fundamentals and technicals are linked. I'm just going to give you a couple of quotes. I'll be back in a moment to discuss. I'll go back after those couple of quotes there from Colin O'Shea. I really like that analogy about the wind and the tides. Now, in terms of the markets, there is an old saying, big fundamentals rule the long term, sentiment rules the short term. You look on any chart of any currency pair, you are going to see big trends that are driven by the big fundamentals, i.e. the tides, but of course there are going to be retracements within the trend when prices are pushed too far to the upside or too far to the downside when emotion comes into play. That is effectively the wind. Now, in terms of most technical analysts, they will say there is absolutely no need to look at the fundamentals at all, because when the fundamental news comes out, it is immediately discounted in price action. So all you need to do is follow price action. Now, is that true? It isn't true at all, actually. All known fundamentals are not instantly discounted in price action at all. And in terms of this, I was reading George Soros's theory of reflexivity back in the 1990s when he first put it into print. And I thought, actually, you know what? That is absolutely fantastic. It shows how the fundamentals and the technicals can actually be used together. Now, I just want to give you a brief overview of his theory of reflexivity in about a minute and a half, and also a review of actually how prices really do move. So just a short review, then we'll be back again to discuss. I'll go back after that short overview there of how prices move and also the views of George Soros. Now, from that little summary, we can see that, we don't want just to look at the fundamentals. We need to know investor sentiment towards them. Also, in terms of a chart setup, we know that the actual investor sentiment towards the fundamentals may not be fully discounted in the chart. So we always want to have our eye on sentiment, and then we can link fundamentals and technicals together to generate high odds trading scenarios. Now, what I want to do now is outline what I consider to be 3 high probability trade setups. I just want to give you a very short summary, then I'm going to come back and discuss in more detail. So here are 3 of my favourite trade setups, and in terms of the weighting of the technicals, fundamentals and sentiment, they change between the 3 setups. So we'll come back and discuss in more detail in a moment. Here are the trade setups. Welcome back after that short summary there of 3 trade setups I look for all the time in relation to the first one. You need to know the big fundamentals to gauge how far prices might go. You cannot do that technically. Also, if you make a judgment on the big fundamentals, it's going to give you the confidence to hold the trade, also to put your stop a little bit further back so you don't get caught out by minor retracements. Now, in terms of big trends, I would say that I'd be looking always for 1,000 pips, maybe 2,000 pips or more. That means I'm going to have to use a stop of probably 300 or 400 pips, maybe even a little bit more. Okay, so it's going to give me the confidence to do it. Now, when you're trading big fundamentals, I mean fundamentals that are not going to turn around quickly. Give you an example. A couple of months ago, we decided global economy is now slowing. We are probably going to move to a risk-off environment. So which currency is going to strengthen? Well, it's going to be the Japanese yen, the world's #1 safe haven. Which currencies are going to get hurt in a global slowdown or move from risk? Emerging market currencies. So we would position ourselves long of the yen against, for example, the 2 that we really like are the Mexican peso and the Turkish lira. Now, they've already yielded us good profits, and I think we'll be holding these trades into the end of the year. The fundamentals are not going to be turning around quickly. Also, in relation to the news, not interested in short-term news stories like maybe oil went up a bit so the peso bounces. That is not a big fundamental. The media just fit the news to the price action most of the time. So you just ignore short-term news stories. And in terms of trading big fundamentals, you don't have to be too fussy about your trade entry. Just want a decent price entry because you're looking for such a big profit. Okay. Now, in terms of trading big fundamentals, of course you can be wrong. But yeah, I think with just a little bit of common sense, anyone can establish the big fundamentals. When I say common sense, just look at is the fundamental outlook going to change quickly? It takes a little bit of practice, but anyone can do it. Now, in terms of price spikes, now we all know that prices spike too far to the upside and greed gets involved, and too far to the downside when fear reigns. And you can see those spikes on a chart. And basically, those spikes always fade. In my view, the bigger the price spike, the higher the volatility, the better the setup is. Now, in terms of sentiment here, you just want to look at the sentiment towards the currency pair you're looking at. So, for example, if prices have moved up, you look around the media can see no reason whatsoever why prices are going to come down. They're making really big predictions for further gains. In fact, if you can't see any reason for the price to come down, that's good as well, because it probably is. The actual sentiment towards the fundamentals is fully discounted. And I always think these sorts of trades offer great risk reward. You normally can use a tight stop loss, and if you get a reaction, it's normally going to be a big one. It's a bit like stretching a rubber band. If you stretch it too far, it's going to come back pretty sharply. So I always love trading price spikes. And the more bullish or bearish the media is, the better. If I can't even see a reason for a turn, that's even better too. Now, in terms of the third setup, that's a kind of peculiar one to me. And over the years, I've seen, prices strongly break up or down. Media cannot explain it. You can't see why it's happened. They are breakouts you should go with. The fundamentals have definitely changed. They're just not in the media yet. Something has happened. And I totally agree with what George Soros says. When you see those moves, just trade them. Over the years, those setups, tight volatility, suddenly big breakout, I can't see a reason. The media, there's nothing in the media on why the price break has occurred, are normally fantastic trade setups. So in terms of my view of trading, the fundamentals, you don't have to make your fundamental analysis complicated. Spotting the big fundamentals, I think anyone could do, like I said, with a little bit of practice. And in terms of sentiment on price spikes, you're just going against greed and fear. And if you do that and you learn to be comfortable with it, you will be trading with fantastic risk to reward. Okay, and in terms of the last setup, just go with it, investigate later. So that is the video for today. I hope you enjoyed the description of the setups. If you practice them, you can make a lot of money trading those three setups. In terms of my strategy, they are the basis of the way that I trade. So thanks again for watching me. Take care. Have a good day.